Buying a security based on speculation and then selling it when the news breaks may seem to be a risky strategy, but it can also be a smart one in the right circumstances. In most markets, especially financial markets, buy the rumor, sell the news occurs. Traders will also transform this concept into trading a strategy based on their predictions for the future. Assume a trader believes that a forthcoming economic report or global occurrence would affect the price of their asset in a specific way. The rumor process of the strategy is when the trader buys an asset based on this instinct. Once the event passes or the report is released, the news has been made public. The trader then dumps their positions and the market moves. How does buy the rumor, sell the news work? Traders and investors in markets other than foreign exchange markets or forex often buy based on expected future cash flows. Perhaps a company's income is projected to be higher than previously anticipated. Traders would purchase a stock quickly, in this case, to take advantage of higher dividends or stock values. This is also true in forex, but instead of cash flows, traders often respond to expected interest rate shifts. This approach attracts investors who check out undervalued markets. This is the rumor, which occurs when potential news or information indicates that an asset can generate more future cash flows. The asset is expected to increase in value in the coming weeks or months. Investors can purchase the asset until it is no longer undervalued. If the rumor is incorrect or the market has overbought the commodity to the point that it is no longer undervalued, news that falls short of expectations will result in a sell-off. Only a surprising news event that outperforms the rumor would keep the stock at its current price. If a positive surprise news event occurs, the value of the asset can rise even further. Where does the buy the rumor, sell the fact come from? Buying the rumor and selling the truth is a piece of stock market advice passed down over the generations. It refers to a situation in which the price of a stock rises as a result of traders buying because of speculation about the business the stock represents. The rumor may be that the business is being bought over by another company or that the company's earnings would be much higher than anticipated. Traders will notice the rumor and begin buying, believing that the rumor will inevitably prove to be true, allowing them to profit handsomely. The part of the saying that says "sell the truth" comes from how a rumor that caused people to buy turns out to be false. The company's profits end up being negative rather than optimistic, causing people to sell huge amounts of stock because the stock price is unlikely to rise now. The phrase "buying the rumor, selling the truth" has a different meaning in the forex market, owing to the fact that rumors are less frequent and the vast majority of traders would not position a trade based on the fact that they have heard a rumor. Traders, on the other hand, will put a trade in anticipation of a news release. Traders view news releases as a way to make a lot of money quickly. You've already seen how much the market swings when the NFP or FOMC reports are published. Traders try to predict which way the market will shift in response to the news by looking at the expected number for the announcement. This is essentially them believing the rumor. They'll look at the predicted number and believe the price will shift in the direction indicated by the forecasted number. When the news is eventually announced, all traders buy or sell depending on the forecasted number, and the price moves in the direction implied by the forecasted number. Now comes the part about selling the truth. Bank traders have worked out what the actual amount for the release means for the market path and have begun positioning trades accordingly by the time the news has been released, and the traders have positioned their trades based on the forecasted number. Bank traders would enter the market and position sell trades if the forecasted number was good for a currency, and several traders come in as soon as the news was announced. If you've ever watched the market after a major news event, you've probably seen something similar happen. It's people who are buying the rumor and selling the reality. People are essentially buying the rumor as soon as the news is released, and people are selling the truth as soon as the news is released. It's important to note that the quote, "buying the rumor, selling the truth" can also be read as selling the rumor, buying the fact, if the rumor that's causing people to sell is based on something that's bad for a currency's price. How do rumors affect markets and stock prices? Markets and stock prices may be influenced by rumors, as traders can open or close positions based on analyst expectations. If enough traders hear and act on the rumor, the price of the stock will move up or down. Traders would typically aim to benefit in the run-up to an announcement, as the impact that the announcement will have on the company's stock has already been priced in by the time it is made. If the announcement falls short of or greatly exceeds expectations, it can have a greater impact on an asset's overall trend. As a result, a trader who opened a place based on the rumor might either lose a lot of money or make a lot more money than they anticipated. Correspondingly, when the rumor is confirmed by the press, the dominant pattern normally reverses as the early traders who picked up on the rumor begin to sell their positions. An example applied to forex trading. The central bank of a country and its interest rate policy are a typical forex scenario that generates both rumor and news. When a central bank increases interest rates, it usually indicates that the economy is doing well. In that case, forex traders anticipate a rise in the currency's value. This is how rumor operates in the forex market. Let's say a forex trader hears about a central bank's decision to lift interest rates. The trader could purchase the corresponding currency based on the rumor. Then there's the news. The forex trader will watch as the news drives the currency's value higher as the central bank finally moves the interest rate. Once the currency hits a high enough value to earn a trader a nice profit, that trader will sell the news and trade the currency at a higher price. News traders' tools and strategies. News traders employ a variety of techniques with a particular emphasis on market psychology and historical evidence. Traders, for example, will use historical data such as previous earnings reports to forecast how future news, such as an upcoming earnings report, would impact prices. News traders may make informed assumptions about whether a security's price will rise or fall in response to a news story by being acquainted with specific markets. News traders may also use queries and notifications to collect breaking news and compare it with market adjustments on a map. The news trader will enter a bullish or bearish stance depending on the trading strategy if certain conditions are met. News traders in most situations are day traders because they open and close markets on the same day. Since news is urgent and has a short-term effect, the ability to benefit is only available when the news is still fresh. Fading is a traditional news trading strategy that involves trading in the opposite direction of the current trend as the excitement wears off. After a positive earnings announcement during pre-market hours, for example, a stock would open sharply higher. News traders can wait for optimism to reach a peak before shorting the stock intraday as the positive sentiment fades. While the stock may still be trading sharply higher than the previous day, traders may have profited from the gap between the day's highs and lows. An example of buying the rumor, selling the fact. Now we'll take a look at a real market example of people buying on the rumor and then selling the fact. The NFP release on May 6th resulted in a formation of a bearish pin strip. This bearish pin has a wide wick which is instantly noticeable. The wick indicates that the market went up a significant amount during the creation of the bearish pin, only to fall back down near where the candle opened. What induced people to buy and then sell in such large quantities is the issue. The response is traders who predicted that the NFP numbers will be negative for the dollar. If you go back to that day, you'll notice that the NFP forecasted number was 205,000, which was lower than the previous NFP report's figure. This means that if the forecasted number is right, the Euro-USD price could increase because the news is negative for the USD. Traders will prepare to purchase using market orders just before the NFP is announced, looking for the forecasted number and seeing that it is likely to come out worse than the previous announcement. They will expect the price to shoot up once the news is released. When the NFP is posted, all traders buy and the price rises significantly. However, not all traders will join long trades at the bottom of the move up that their buying creates. Instead, the price will rise in phases, with the candle pausing and stalling for a second or two before making another major move. Because of the scale of the price increase caused by the traders purchasing, a large number of other traders join buy trades because because they believe the price will continue to rise. By the time the market has risen a long way, the banks have concluded that the NFP results are actually good for the dollar and that the Euro-USD market price should fall to reflect this. The banks will not sell unless they believe there is a chance to profit. The only way they will profit is if other people lose money. They know that when they place their sell trades, the price will fall, forcing all traders who put buy trades when the NFP was released to close their positions at a loss, causing the Euro-USD price to fall and pushing the bank traders' sell trades into profit. As you can see, the price of the Euro-USD has dropped sharply since the release of the NFP, implying that bank traders put sell trades when the NFP was issued. The odd thing about this release is that the real NFP number was negative for the dollar, contrary to what the forecasted number indicated. So even if the rumor was true and the traders had made the right decision, the price dropped because the banks still decide what the stats from the news event mean for the economy. I hope that this video has clarified what buying the rumor and selling the truth, or selling the rumor and buying the fact means. Unfortunately, there is no way to predict that the banks would enter the market and purchase or sell after a news story has been published, so there isn't really any useful advice. We don't know whether the banks have entered trading positions until after the news has been published, which can also be useful because it can give us a clue as to which way the price is likely to shift in the immediate future. I hope you found today's video informative and useful in broadening your understanding of the topic. Please give this video a thumbs up and join our team by subscribing to our channel. You can also click on the notification bell to receive new content on a regular basis, ensuring that you don't miss out on anything. Thank you for taking the time to watch, and I hope to see you again soon.